Good evening. This is the Elliott Wave update for the S&P 500 and the Nasdaq 100 for Monday, September 19th, 2022. The markets did, at least here in the S&P, move down during Globex and put in an additional new low below what we saw on Friday. Friday's low was 38.83, I believe it was. And we rallied pretty strongly off of that level, 38.53, excuse me. And then overnight, it got down to 38.46. So slight new low, excuse me. And that was enough because I had been discussing how I was thinking we had to leave open the possibility that we'd still were putting in some finishing touches for minor wave one. And so that did take place. I've now labeled minor wave one here instead of here. And we're continuing to play catch up in terms of putting in a minor wave two corrective bounce. Now, what that looks like, I want to take out one thing. I'm going to take that, which leaves us with the Fibonacci retracement for the wave two. And we already are in the hourly chart. So the action was not all that bad. It wasn't quick. It wasn't super slow. There were certainly some jerk movements, kind of just suddenly just flipped and flew. But overall, there were possibilities to go in and grab. Trading was not really focused on too much, and then suddenly just picked up in certain areas and other areas just kind of go on. So it's like, as I described, I felt that it would really be we should move up, but against the backdrop of the Fed meeting on Wednesday and leading up to that, et cetera, et cetera. And we come in today and Apple Computer is actually being marked down around 149. Some of the other stocks are already being marked down, but that quickly changed with Apple getting itself up back above 150, back above 152, actually. So this, in fact, it got back to 154. It was a strong move again for Apple up 4. So that provided a lot of the late little boost that we got here in the S&P and in the Nasdaq. What it's done, again, on an Elliott basis, it just brings into focus what I believe is going to be the completion point for minor wave one of that intermediate third wave down. So we're doing a bounce. What can we expect from the bounce? Well, here's the 0 line. Here's the first. The 236 actually was challenged today. And in fact, as it closed its extra hour session right there at resistance, which is at 39.23.24. And above that, the 382 level is going to be 39.71.72, around in there. We have the 200-day EMA at 39.59, and I'm sorry to say I'm using a different computer, so I don't have that EMA in there. And I could use it, but I'm hoping to be back to my other computer, which has all of the different moving averages on it. Everything else remains the same because that transfers no matter where I log in. So what we can expect, in fact, I will just add it because I believe it is below it. Edit studies, that's going to make it quicker for me. And we're going to a legacy, but I want a simple moving average, simple SMA. Oop, simple, I just saw it. Simple moving average. Add it. And we want to take a look at it. We're going to do a 200 period. And we are going to put it then in the magenta color. And we're going to give it 2 so that I can see it. And the style is going to be a dash. Okay. And apply. And there it is. Okay. So, and then I want to do one more to put in for that 50. And so again, we're going back to simple moving average. We're going to add it. We're going to go over here real quickly. We're going to make this into the 50, but the SMA. They're important because they're in play. And that's why I am going to go ahead and put this up. And this one will be that lovely saddle brown. That's what I think that is, but we'll see because it should be the same as that color. Okay, and apply. And there it is kind of underneath, but at least we could see it. Okay, so let's go back over to that. So we have the 50s a little bit below, excuse me, the 200s a little bit below fib support at 39.72 and then a little bit above. So the zones actually be 39.60, 39.72, 39.82, and that takes care of all of that. That's going to be a resistance zone. Right now we're trading above both the SMA and the EMA on the 50 period moving average. So the internals on that don't look that bad. Again, we're looking for an ABC up, and here we can see that it's not quite, but an A, a B, and then a 1, a 2, a 3, a 4, and likely a 5. We'll probably get that overnight. And if that does not stop it, then we're going to be working through a little bit larger. And again, what we have is the 50. We have 382 at 39.72. We have the 50% retracement level at 40.10. We have the 618 at 40.49. Now, against the backdrop of what we're looking at on Wednesday, I again don't necessarily see it, but then again, at the end of the day, it was like, okay, they're just coming in and they're just buying, and that was the name of the game. So I'm putting it out there because they're in play. Fibonacci-wise, they become in play, and we shouldn't be surprised if it does start to go. It does not change the hourly chart. It does not change the daily chart. It just means it's up to the next level, because the expectation would be that it all holds below 41.75, but it may decide it's going to go up here and visit it. And even though the basis for the market is that we are expecting downside, I'm still, even according to my Elliott picture, looking for this intermediate wave 3 to pick up and go again and to drop. May do it from this level, current level, could do it from a little bit higher, and that would fit. And we get the ABC, and that would fit. And then we go down, and as I just counted out, it looks like we have an A and a B, and then a 1, 2, and a 3, and a 4, and maybe a little bit of a 5. We'll see how they go. So moving averages still pretty much pointing down, rolling and coming up as the market returned and pushed higher, as they should. The 50 very, very sensitive here, and on the SMA kind of giving a little lift as the 4 and the 20 and the 8 all kind of lift there. As you can see them bunched together. So that's actually the S&P for tomorrow. Again, I'm not expecting a whole lot, simply because Wednesday's the big day. Wednesday is when the Fed makes their announcement. So as I discussed, I still believe that a lot of what we're seeing is options related. So we have a lot of options trading. And so, come on, Jesus Louise. Sometimes you get these computers and they don't want to follow what your mouse is trying to tell them. And I'm just trying to open it up a little bit. So this gets a little crowded, and I'm going to take that off so we can see that pattern. Again, nothing's really changing on all those charts. So I am going to move over to, so we still have that. We're down now. There's the 1, but you can see there's barely any room. So I'm going to go over to the Nasdaq. And again, hopefully tomorrow we'll be back on the other computer. And we'll go from there. Nasdaq, same deal. I don't want to start in the daily. Let's just start right down in the hourly chart and take a look. Again, we can see that we did not come down. So it makes it for a little bit larger. A, B, and now we're in the C, and that's 1, 2, and now we're still in that third. So for the Nasdaq, yeah, I would think that they're going to get it up another 100, 200 points. For the Nasdaq, there shouldn't be anything, because they can do it in Apple alone. They get Apple going, they get Meta going, they get Microsoft going, they get Google going, et cetera, et cetera. They all kind of pile in. It just goes tick, 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 tick. And it's all, again, in my view, will be really rolling around options. I doubt anybody's just going to want to, but people may. But larger traders, why would you need to pick up a large stock position in Apple right now in advance of what the Fed has to say or not say come Wednesday? So we shall see. So for tomorrow here in the Nasdaq, I would continue to look for a little bit of upside. The market was very subdued today, so we didn't really break down. We didn't really break up until the very end of the day. As you can see, 12 my time, so it's 3 o'clock New York. We started to put in that more serious rally, and then after the bell, they just pushed it a little bit higher. So I continue to look for upside. We do have that resistance at 12,063. It was exceeded, came back down, closed below. Right now, I think, let me see where we are. That's 120, so it's kind of looking like, is that 120, really? Hold on a sec. I want to just bring that this way. No. Where are we? 12,050. 12,050. Okay, so they're a little bit higher from the close. And so we have this resistance up here. And when the market does turn to go down, it's seriously because we're in this intermediate third wave, a very large down wave in terms of what we've already done, anticipating stronger breaks below 11,068, actually. And if we go back out to that daily chart, we're looking for that June low to be broken. And whether I do think it'll happen within intermediate wave 3, about how imminent it is, I don't know, since we're now going to be bidding 12,050. And so we're moving further away, about 200 points away from the lows at 11,778. So ultimately, we need to get down and break 11,068 and start heading towards the 10,000s. Ultimately, within this entire primary C wave down, I am looking for sub 10,000, and I am looking for between 8,000 and all the way back down here, like 69. So we have a little bit of a big window, 1,500 point window for this to kind of end and then set it up for the next rally phase. In the meantime, not a whole lot. Going to continue to look for basically a slow market. We're looking for volumes that can be good, not so good. It's like when they show up, which is like if you're a big buyer, the sellers are like, yeah, okay, fine. You get stuck. The positions that they want, they have, and they're going to get ready. They're starting to, they will pull back even more, I think, tomorrow and as we move into Wednesday. So that's about the story. Here in the Nasdaq, we do have some resistance at 12,063. I would suspect that that'll get easily broken again, but this time it'll just keep on going. And then our next resistance is going to come from the 200 EMA, and that's at 12,185. We have Fibonacci 382 retracement at 12,240, and then we have the SMA at 12,263. Normal wave 2, 50% to 62%, as we have discussed previously. That would be 12,383 to 12,525. So that would be a zone. Now, I would not expect the S&P to kind of really put in a topside rally, but the NASI, it just depends on what they get going. And this could be between today, the balance of today, or tonight and tomorrow and Wednesday morning. So, but right now, that's where resistance is. If it starts to break down from here, the pattern kind of does not fit totally, but I'm sure that it would work itself out. So in other words, if this A, B, and then it's 1, 2, and we kind of start to move up, come on. Oh, it does that, and then it does that. This is painful. The pain. So here is what I'm trying to look at, and it just spreads it out awful. This being the B1, 2, come on, 1, 2, 3. So we got a 4, a 5, a 4, and a 5. So yes, it could get up there. It could get up there without a problem. Now, and still, see, that's the same area just before it was all squished. So this still looks like it's within the 3 of this building C wave. And then we have to finish that doing a 4 and doing a 5 of C, and that could push us up into here. 185 to 263, 253, 63. Okay, I'm going to end it right there. And our next update will be on Tuesday, September the 20th.